Hey guys, this is probably one of the more important video or weekly updates that David and I have done in a while. It is September 5th, 2023. Dave, how are you doing, bud?
Doing great, Peter. How are you?
Yeah, I'm doing well. If you hear pounding, that's because there's renovation going on right next door. But I appreciate you being on the call as always. I'm super excited on this one specifically. We've been talking about, I guess, the market forecast, right? And we were talking about it like Jerome Powell doesn't know, for people to say, hey, where interest rates going to be in 6 months, it's a wild guess at this point. But I want to talk about things that we can kind of signify and control, and it's where are prices now versus where they were last year. What are you seeing on your end? I'm seeing a little bit, people have equity. So talk on
Right.
that.
Yeah, we're still seeing home prices on our appreciation note, and I'll let you touch base on that part. Home prices in our obviously, the Jersey Shore area, especially in New Jersey, and our surrounding, tri-state markets. A slower appreciation, maybe a little bit, not drastic, but definitely on our appreciation. Um, the national average, per Google and even bank rate right now, 30-year fixed national average is like 7.52. I mean, we're seeing, depending on, credit scores and everything else, unfortunately, yeah, there are people that have higher rates right now. It's not slowing down the market. Unfortunately, it's the Fed really, they were hoping that, with rates up, maybe they would slow things down, but there's still a ton of people out there looking to buy in our limited inventory space. And as home, seller people that own homes right now currently, we're seeing some of them tap into that equity more instead of selling because 85% of America does have a rate probably below 4%. They are tapping into the equity to either remodel, redo their house so that they can live there longer term, sell it in the near future when things maybe stabilize a little bit, or look to buy other properties. They're tapping into that equity, because that is money that obviously they've built up as their home prices have appreciated.
Yeah, it's interesting because I can speak on this on a personal level.
Mhm.
We did a major renovation to the house last year. We thought we were done for the most part. Guess what? We just started a week ago, another major
Another
renovation,
project, right?
another project on the house, and this one more intense than last year's renovation. So, circumstances change. This next renovation that we're doing is we're moving my mother-in-law in, right? So she's coming in from Minnesota, and she's going to come to New Jersey, right? It's pretty interesting because one thing is we're still doing transactions. I closed the deal last week, closing the deal this week, and it's we're still very active. And like you said, there's a lot of people that are still looking for homes. They don't really care what the interest rate is because it's 100% interest rate when you're renting. What I'm seeing on my end is just the equity level. It's like I shot out an email last week to my database saying, "Hey, at what percentage would you sell
Mhm.
of your Zillow estimate?" Right? Not that
I
Zillow,
saw that.
yeah, and it's surprising how many people responded. It's like the amount of people that said I could never sell right now just because they've done all these renovations, they've built the perfect home, whether it's special needs or whatever it is versus, hey, I would need to have, at least a seven-figure number on a $400,000 house, right?
Mhm.
I get it. You're not really motivated to move, but it was interesting seeing all the responses. Where I'm kind of starting to see people test the market is, hey, listen, if you can get me X dollars for my house, I'll list my house. Okay, listen, we know whether we're within the ballpark range. And
Mhm.
I always say once somebody makes a real offer, and you have something to consider, it's what your number was in your head versus, hey, this is real money on the table.
Mhm.
People do consider that. And then the second big trend that I'm seeing when you and I were talking about this is as we're going into the tail end of 2023, a lot of the major firms are readjusting their forecasts for this year. Uh,
Right.
and it's I'm just looking at a chart here. It's like Goldman Sachs was predicting down 5 to 10% this year. Now their forecast for this year is almost 2%. Fannie Mae was down 1.5 for the year originally. They're now at up 3.9. Zillow down 0.7, pretty much flat. Now they're forecasting up 5.5%. And it runs everything from being flat to up 6%. And it really just takes, kind of what is your local market. We were talking about this. It's kind of like a
Sure.
rolling inflation that's going on. So um I'm excited, man, because there's some people that have been waiting a long time for houses. And I think that, once people realize, hey, you know what, 7%, but I have so much equity in my house, and I can move and pay cash for something because I don't need such a big house. I think that people will make that consideration, but I think that we're in the new normal, as they say.
Yeah, I mean, listen, the people that have to sell right now or are selling, right? It's a lot of times they've outgrown their space, right? And without putting on a major addition, which you can't do if you own a condo or a townhome, right? And a lot of people that those growing families, we're seeing a lot of them right now in this market, and they're taking that additional equity that they've gained, right, from owning and buying in the past and putting a larger down payment down. They're not buying something for 5% down. They're putting 20, 25, 30% down. We just had a client that got an offer accepted this weekend. Same thing. Now they're selling a place and they're putting 30% down on a much bigger house because they've kids are older now and they need more space, right? So from that perspective, so a lot of it are those transition buyers too are able to get that versus being the first time home buyer with maybe a lower down payment. So that's what's helping just basically touch a base exactly on what we just talked about. In our market, same thing I said about this steady appreciation. We're not going to see those drastic 20% increases in appreciation, but if we go back at the charts and look over the last 70, 80, 90 years, it's that all real estate, right? They're always that 3% mark, 3% mark. That's that slow and steady, right? Wins the race kind of a thing. And that's kind of where I think it'll help us maybe get back that healthier market. If we can get into that boat.
And I saw something. I was down in Dallas for the Tom Ferry event last week, and 1 thing or 2 weeks ago, I don't even remember. But it was interesting that they were saying that when you look at the month over month trends, we were spiking earlier this year, like 1% over month. We're getting back to what you were saying, the historical levels of a 0.1, a 0.2, a 0.3 increase, not these like big dramatic changes where like you're saying they add up to 3% at the end of the year. And I think that once people kind of adapt to the 7%, it's again, circumstances change everything, right? If you're in the middle of an ugly divorce, you know I don't care what you could be at 1% interest rate, if you can't live in that house,
Right.
you're coming up with a different strategy. So I'm seeing a lot of creative stuff. I'm seeing people that want, and again, one thing that people don't talk about is, a lot of people are getting by month to month and they're carrying these huge credit card debts.
Mhm.
Trying to figure out how can I take some equity out?
Yep, that's a great point. I mean, we we have a couple different options, but we rolled out a few months ago. I think we touched base on this once before. An equity express where a loan basically that goes up to 85% combined loan to value. It's a second mortgage, has to be in second position. You can get approved within as little as 5 minutes and close in 5 days, kind of a thing. And it's going to be better interest rates than a credit card. Obviously, traditional first mortgage rates, like I said, we discussed per Google bank rate, that national average is like 7.55. So, and I think prime is sitting at like 8.5 if they didn't just raise it to 8.75 coming up. So, usually line of credits are, more, based in that, prime plus range. But it's allowing people to amortize it over, 5, 10, 15, or 30 years, get solid payments in there, pay off debt, a higher interest rate stuff in the 20s and 30%, and allowing people to clean up credit, take some of that money, maybe do some projects to the house, do different things to put them in a better position. And, quite a few people I've helped in the past couple of weeks have taken advantage of that type of loan and are able to do some projects to the house, pay off some other high interest rate debt stuff, and clean up their credit a little bit as well by lowering the interest on some high balance and high interest rate stuff.
Yeah, and and then on the flip side, there's people that are sitting on tons of cash and buying their secondary homes down at the Jersey Shore, because not only are they looking at it as a an investment, with some sort of return on it, but a place where that they can just go to. The numbers that people are paying for like a weekly rental, for a
It's
bungalow kind of
ridiculous.
sometimes.
It's ridiculous. Yeah, I mean Jersey Shores. Yeah, it's been a great summer. Right now, now it's a local summer. Now we're after after Labor Day.
Just
But yeah, obviously, I mean, we really definitely could utilize some more inventory. It would certainly help a little bit. Um, but we're seeing some stuff pop up a little bit here and there. I mean, I'm seeing a lot of my past clients, like I said, are just they're coming back of, hey, we need another mortgage, we have to sell, that kind of a thing. But it needs to be a lot more widespread
yeah,
throughout our markets so we can get more inventory and move a lot of these buyers that are out there. And if and when rates do drop, there's just going to be more buyers coming into the pool, right? So adding more inventory won't even be enough necessarily because we have limited inventory with the buyer supply we have now. So when rates drop, more buyers come in, that inventory really needs to wide open to have that supply and demand balance out. And unfortunately, that it's probably not going to happen for a while.
it's what, it's just I don't know, the last last 3 4 years it's just been, we've never been in these, we've never seen interest rates rise, as quickly as they have. We've never been through COVID where interest rates dropped down to 3%, and now it's all supply and demand. And like you said, people, including yours truly, I'm locked in, I'm at 3.25. And hey man, I got plenty of renovations that I want to do on my house. So that's where I'm at. I'm staying pat for a while.
Yeah. No, like I said, I mean, once you're there and as long as you've already got that place, you don't have to. Like a majority of America right now, they're comfortable not selling.
Right, right. So
So what are they going to do with that money? Whether they invest it, take money out, the equity out to invest, or do different things. That's everybody is different.
yeah,
But
for
just trying
sure.
to give people options if they want or need anything of that nature. We're here to help, right?
Yeah,
And there's people that are I know there's they're willing to talk to a realtor and say, hey, listen, you know what, is this renovation even a good idea,
right.
right? Because is it going to help increase my home more, or is it more personal stuff that it may not? And am I spending this money that it may or may not be worth it in the future? Because if I want to sell an exit plan in 3 to 5 years, this, that, like, I think a lot of people are really trying to inquire about options right now, and they need help of just, you got to talk to a professional, right? And someone that's going to understand, the situation, what they're trying to do. And you just try and give them your best advice out there, right? So, and a lot of people are reaching out for, you know, what should I do? Well, I don't know what do you want to do, right? What are your needs? What are your wants,
Right.
right? And then we can only just try and paint a picture and help them give advice, right? Maybe they need to sell, maybe they're going to stay, maybe they want to do this or that. And we try to help them, fit what their needs and wants are, and hopefully we can assist if they want to do anything.
Yeah, no, and that's the whole thing. It's just we always talk, or at least I, with my team, it's, what do we sell? It's not obviously not real estate. We're kind of the knowledge broker, what's going on in the market. Sometimes, you want to take that first offer because it's, we started off high and, this is exactly what we're waiting for. And then, there's times where you drag your feet and price it, aggressively so you get multiple offers. So it's yeah, it just depends on where you live at this stage of the game and what is your competition. But Dave, let's see what goes on from here. I always look at this time of year as kind of, within a couple of months, we're in the holidays.
Yep.
And people are always looking for houses. That's the part that always kind of like fun to me. So it's like, do you want to be in before the holidays? Then you
Right.
need to find a house right now. And I have a couple of clients that are moving back into the area and they need to find a home, by January. And it's been difficult because we have, like everybody else, multiple offers and terms. That's another thing going on. Terms, appraisal waivers, home inspections are limited, and what else are you going to do to sweeten the deal with use and occupancy is always one option. So
Yeah, we're definitely seeing that as an option. Some people, if they're living with mom and dad or something, they've got, right, they're not tied into a lease. They could try to make their offer a little more attractive. Um, and by doing a UNO, obviously, when anyone's signing their mortgage docs, they are saying that they're taking occupancy within 60 days, right, for a primary residence. So, um, they got to keep that in mind, right? So technically, they could give up to 60 days on paper, for that matter, if that needs to be done, which is an option.
there's pounding going on in the back, and I just
Uh,
wanted to let everybody while you were talking. So listen, Dave, like, how do people get in touch with you? Just to kind of talk about, we talked about the home equity line or the rapid fire.
Yeah, Equity Express and anything. Yeah, happy to help. Best way to reach me, 732-853-4969 on my cell, or email david.baum@ccm.com. Two best ways to reach me. Always available, happy to help, and appreciate the opportunity to speak, Pete. And obviously, I'm sure a lot of parents out there are real happy that it is back to school week in Jersey, right?
Yeah,
So
for sure.
usually the first day of picture, for the kids are out there, but it's also the first day of pictures of the parents being, we're free for another 10 months, right? Kids back at school.
Yeah, they're excited. My little one's definitely excited to go back to school. We're still doing a couple of last minute play dates before they actually, bump up in school. But yeah, it's exciting times. I think that we're in the midst of something really special. There's I just appreciate you being kind of part of the team, and we'll see what happens going into the end of the year. So we know we
Yeah,
have.
it's finished strong. We're here to help as many people as we can, right? And just give people options. And like I said, we're happy to help and help people get into homes, or make the most of the homes that they're in, right?
Yep, exactly.
So love to speak to anybody that we can help out.
All right. Thanks again, everybody, for watching. This is Peter Cunha, your New Jersey real estate giant, with David Baum over at Cross Country Mortgage. We'll be back with you next week. Talk to you soon.
Take care, everybody. Peace.